trading family, what is good? It's your boy Wildcard and the quiet assassin TB in the booth. We're staring down a tape, so frozen you could ice skate on it. CPI is tomorrow, not today, despite whatever thumbnail you saw on YouTube. Trust the calendar, not the thumbnail. Futures are dead flat. S&P, futures up, maybe two handles. VIX hovering at 15.4, and overnight nothing moved, because the only thing that matters drops Thursday at 8:30 Eastern. We're in the pregame, and that's the tension.
Quick disclaimer, nothing we say is financial advice. We're two guys talking markets, not telling you what to buy. Do your own research, manage your risk. Now, the tape is coiled between today's warm-up and tomorrow's binary print. 10-year auction this afternoon, NFIB small business optimism at 10 a.m., and after-hours tech earnings. They're all dress rehearsals. If the auction goes soft, rates could spike into CPI, and that multiplies the stakes. The VIX at 15.4 is a lie. It's going to rip if the number's hot.
And I'm sitting flat. My TFT algo put on First Solar, FSLR, and Insight, INCY, last night. Brackets active, system doing its job. My gut call account, all cash. 5 figures 2 cents. Not holding a winner into a binary event. That's discipline. TB, you got the Wave Trader algo loaded?
Wave Trader bought TWLO yesterday, 5 positions, and added a third tier to Palantir. The machine gets to feel the overnight while I sit on my hands. My paper account is cash too. No callouts, powder dry.
Let's get into the day's biggest story. And for me, it's not a headline, it's a price. Gold, $4,473 an ounce. It touched $4,400 yesterday, and it's still climbing. That's the receipt. The market is buying the all-time high and buying the hedge at the same damn time. Not greed, not fear. The tape just refuses to choose until the CPI print forces it.
Gold is a real rate signal. If the market thought the Fed was cutting aggressively, gold would be higher, but it's not parabolic. It's grinding, which says sticky inflation expectations. Silver miners broke their trend line. GDX and SLV are the cheaper ways in, but volume needs to confirm. It's not a breakout yet.
But it's the receipt because faith in fiat is eroding slowly, even if equities don't care. And while gold flashes that warning, the oil market is giving us an even crazier contradiction. Deadly Houthi attack yesterday. First one with fatality since the war reignited. 3 missiles south of Mocha. 6 dead, including 2 rescuers. Shipping attacks are back as talks hit an impasse. The United States assessment says Red Sea disruptions through 27, and West Texas Intermediate crude is down 0.7% pre-market at 82.60. The tape is bored, not scared.
5 months of this, 777 follow-up stories. The war premium is exhausted. Energy Secretary Chris Wright says flows surpass pre-war levels, and former President Trump claims 100% control of the situation. All of those things can be true at once, and the barrel just shrugs. So the trade is the equity, not the barrel. The energy sector ETF is up 4.12% on the week. And Exxon broke its range, pushing toward 160-161. That's the signal.
The political floor under oil is real. GOP fighting over war funding, gas prices, a November liability. Iran's got a power vacuum with the new supreme leaders still hiding. Dips in energy equities keep getting bought. But I am not calling a floor in crude. Ever. Our track record on oil geopolitics is a measured blind spot. About a third of our misses were long oil risk calls that called a floor, while crude ground lower. So, no floor. But Exxon breaking toward 160 is the real tell.
And while we're on inflation survivors, look at ELF Beauty, ELFF. They cut China production dependency from 99% to 45%, took a dollar price increase under 170% tariffs, and sales responded. That's a company navigating the new trade war reality, not just a chart. It's the playbook for consumer brands.
That's survival, not just a thesis. But let's talk rotation, because that's the undertold story. TB, take it.
The equal weight S&P made an all-time high yesterday, while the cap-weighted index went nowhere. IWM was green, the Qs bled. The sector board is screaming. The energy sector ETF energy up 4.12% on the week. XLV Healthcare up 3.65. XLB Materials up 2.38. Meanwhile, real estate down 2.41, utilities down 1.09, consumer staples down 0.8. That's inflation survivor leadership. Money leaving the Magnificent Seven and flowing into the 300 stocks that do better with sticky prices. The market is pre-positioning for a hot number.
So if CPI comes in above 3.4 tomorrow, this rotation accelerates. Energy and healthcare rip, tech gets sold, and the equal weight index keeps making highs. If it comes in cool, those names give some back, but the trend is established. The tape's already voting.
Exactly. And the economic calendar backs it up. Today is the pre-game, NFIB small business optimism at 10 a.m., consensus 97.5, prior 97.4. That's a nothing burger unless it misses hard. The real warm-up is the 10-year auction this afternoon. If demand is weak, yields spike, and that puts pressure on equities ahead of CPI. Then tomorrow at 8:30, headline CPI consensus 3.4%, core 2.5%. Prior was 3.5 and 2.6. A beat above those numbers, and the market panics about a hawkish Fed. A miss might spark a relief rally in tech, but energy might hold because inflation isn't gone, it's just decelerating. Friday, we get PPI and United Kingdom GDP.
So the 10-year auction today is the tell. If the bond market pukes ahead of CPI, the tape gets even more coiled. That VIX at 15.4 is a lie. It's going to rip tomorrow if the number's hot. And that leads us straight into the international plumbing. Because the carry trade is the hidden grenade.
Overnight, the Nikkei up 0.83%, Hang Seng down 0.83%, Shanghai down 0.5%, but the Kospi ripped 3.68%. In Europe, the DAX up 0.2%, FTSE's down 0.1%, Euro Stoxx 50 flat. The macro key, dollar-yen inching toward 160, intervention territory. If it breaks, the carry unwind starts. Korea's 30-year bond yield hit a record high on oil and rate hike bets, yet the Kospi rallied on artificial intelligence optimism. Same country, two stories. The bond market screaming inflation, the equity market riding the artificial intelligence wave. That divergence can't last.
And if CPI prints hot and yen breaks 160, the margin call chain starts in Tokyo and ends in every high beta artificial intelligence stock with a beta over 2. Chips cannot outrun a carry unwind. Nvidia, AMD, the whole complex. If you're levered, you better have a plan. My gut account is flat for exactly that reason.
The yen is the key. Japan's PPI also comes tomorrow, expected at 7.4% year over year, up from 7.1%. That adds fuel. The three-country tripwire is real, and it's not theoretical.
So that's the macro minefield. Now let's talk earnings. Because tonight is the artificial intelligence rates exam before the real exam tomorrow. TB, run it.
Nebius reported this morning, no fireworks, quiet. After the close tonight, Cisco, the artificial intelligence network tell, if they guide up on data center switching, that confirms the build-out is real and on track. Coherent, COHR, is the infrastructure proof. They make optical components. Cerebra's, CBRS, is the sentiment gauge. They're the challenger to NVIDIA. CoreWeave popped 10% after the bell yesterday on NVIDIA Nematron 4 chatter. So the artificial intelligence trade is consolidating, not dead. Tomorrow pre-market, JD.com and Tapestry, TPR. After the bell, Applied Materials, the semiconductor equipment giant, the real capital expenditure tell, and the quick hit, ELF. Beauty, as we said, tariff survival story, not just a beat.
So tonight's prints from Cisco and Coherent will set the tone for tech into CPI. If they guide weak, the Qs gets crushed regardless of CPI. If they smash, maybe we get a relief bid even if the number's warm. But I'm not betting. My TFT algo is in First Solar and Insight, completely different sectors, and WaveTrader is holding TWLO and Palantir 3 tiers deep. The machines get to feel the overnight.
Right, and my paper is flat. No callouts.
All right, let's dig into the portfolio. Hot news. The oil contradiction in full depth. The drivers. The Houthi attack was the first deadly one, proving escalation. Yet West Texas Intermediate crude faded because 5 months of similar headlines have numbed the tape. The psych texture is boredom, not fear. Traders have heard this song so many times, the car alarm doesn't register anymore. The second-order effects. If Red Sea disruptions persist through 27, energy costs embed into everything. Transport, manufacturing, consumer goods, stoking core inflation, which keeps the Fed hawkish, which eventually breaks risk assets. But right now, the market is rewarding the energy sector as the inflation survivor. So the trade is the energy sector. ETF, not crude. The bull case. Supply remains disrupted. OPEC plus disciplined. Political floor under gas prices means any dip in energy equities gets bought. The bear case, a ceasefire would collapse the premium. China demand weakens. The equity trade is crowded. But the tape isn't trading the bear case yet.
The names it touches? Exxon pushing 160, Chevron breaking out too. Refiners like Valero, VLO, and Phillips 66 PSX are strong. Midstream like Enterprise Products Partners, EPD, is bid. But we have to acknowledge the risk. Our track record on oil geopolitics has been weak. So no floors. Until then, the trend is up.
I'm not touching crude directly. My gut book is cash. And I'm not calling Exxon at 160 as a sure thing. I'm watching it as a bellwether. If it breaks and holds, you ride the wave with a stop. If it fails, you step aside. Simple. But the theme is war premium exhausted for crude, alive and well for energy equities. The barrel is numb. The equities are not.
See, exactly. And that's the fork for tomorrow.
All right, here's what we're watching tomorrow. First, the CPI print. Headline 3.4, core 2.5. Any beat and the tape gets wrecked. A miss, and you might see a relief rally. But the rotation still matters. Second, the 10-year yield. If it spikes on a hot CPI, that's the real danger for equities. Exxon at 160. A close above confirms the energy breakout. A rejection sends a warning. Fourth, dollar-yen at 160. If that breaks, the carry unwind ignites and everything high beta gets hit. And then Friday we get PPI and United Kingdom GDP. Stay nimble, stay disciplined, and remember, the tape doesn't care about your feelings. I'm Wildcard, he's TB, and this is Trading Floor. Keep your powder dry and your stops tight. We out.